by AU Small Finance Bank. That one is reacting to his earnings. We have Mr. Sanjay Agarwal, who's the founder, MD and CEO at AU Small Finance Bank, joining us on the show. A very good morning to you, Mr. Agarwal. Thank you so much for joining us on ET Now. And let's talk about your earnings. And the stress is actually rising in the unsecured segment. Your credit cost has gone up. You indicated that the annual credit cost will also stay elevated given the stress that is rising from the credit card segment. Can you highlight the strategies that you may implement in order to contain your credit costs? What's the way forward? What should we all look out for?
Generally, first half remained like this, but this time it was more tougher. But if you see our entire asset quality, and you want to break it up, then you will see that our retail asset has been firmed up. There might be some slippages there, but it happens in first half like this only, and then we have a strong pullback in second half. So there, I don't think that we should read much. Be it vehicle, be it MBL, SBL, affordable housing space, or gold loan. There I strongly believe that second half would be much, much better than first half. Our commercial banking asset quality is in perfect in line because we deal in a very different segment there, right? And but I think people are talking just more about MFI and credit card business, which is just 10% of our overall share in our business. So MFI, is going through cycles. It's a cyclic business, right? But to our bad luck, the cycle came earlier than anticipated, right? And it just came in quarter two, and it happened dramatically, to be very honest. But I'm saying the October is much, much better than September. So it's an early indicator, but it's not an event risk. It is more about the momentum lost for those customers who are really informal. So we need to rebuild the entire momentum in those category by building more businesses, by more activity, by more private capex, government capex, and then I think we will see a better maybe quarter four, maybe quarter one next year.
So the second half of the year is going to be better than the first half of the year. But Sanjay, I understand you mentioned that MFI is a small portion of your book and it's an industry-wide phenomenon. But even then, are there any specific regions or pockets that you can call out where you are seeing specific pressure?
No, I think I would only say you this, that we are well diversified in every sense of microfinance, be it district level, be it state level. So there is some more pressure in Bihar or Tamil Nadu, but we are well diversified in terms of our share in market, So I don't think that will be severely impacted because we are one district or one state loaded organization.
Right, Mr. Agarwal, you're expecting the stress actually to remain in H2 as well. So are there any early signs that you are actually witnessing that you could share with us? What's making you actually tilt in that direction when you talk about the stress? And do you think the most stress may come up in the quarter that we are in right now, that's Q3?
Not really, to be honest, because as I already commented, that second half could be much better for retail asset. Commercial banking asset quality is in shape, and microfinance, we just started that pain in quarter two. October is giving us a little bit more hope, and I believe that if economic activity comes back, and we have that I would say second half better than the first half in terms of overall momentum, then I don't think that credit costs on MFI will go out of control. It will go up. That is why we have guided you that it will be as bad as the first half, but not more than that. And credit card, we are going through the learning curve, so we'll see how we really manage that whole learning and build it up in our practice so that in future we have a better control in our asset quality.
Okay, that point is noted. But if I look at your portfolio mix, the MFI segment has come down by 70 bips this quarter. Do you think this proportion can go down below the 7% mark because of what you talked about?
No. I think, once the pain is there, so you can't go and look for more business there, because the idea is to really understand your customer more, understand the entire segment more. That is why the focus is more on understanding and maintaining the asset quality than an asset built up. And I just want to say you this that this is only a 7% of our book, right? Maybe 7.5% of our book. So it won't derail our entire growth of bank for this year.
Talk about your NIMs because it's coming at around 6.1% on a quarter-on-quarter basis. It saw an uptick of about 10 basis point, and it's in fact going up in an environment when others are actually facing some pressure on NIMs. So you've guided for 6% NIMs for FY25. If you could tell us what's the driver for the NIMs going ahead, as well as what actually drove the NIMs higher in this quarter.
Well, I think I'm so happy that this quarter has given us three big milestones. One, which is we crossed the 1 lakh crore deposit in this quarter itself. We crossed the 1 lakh crore asset in this quarter itself, and we also has filed for the universal bank transitioning, right? And the team has done a brilliant job in terms of building a 1 lakh 10 crore like kind of deposit in this quarter at that to a cost of 7.04. Initially, we guided that our cost can be around in 7.2, 7.25. But the way we have built ourselves in last so many years, the benefits are now coming up, because it's a holistic franchise where people are now trusting us. And that is why more avenues has been there to build a deposit. So I think that's where, my confidence comes that we will protect our name, and simultaneously our retail asset also has been built at a higher yield now from last 9 months. We are able to pass on the incremental cost to the end borrowers. And commercial banking also has shown up that they can also inch up in their yield. So that is why we say that our NIM can be little bit more what we guided earlier.
Okay, and Sanjay, at a time when everybody else is talking about the cost of funds going up, you've actually lowered your guidance. Has the bulk of the repricing behind in terms of the entire deposit repricing?
No, so we have also has incrementally has passed on that cost to the borrower. If you see our incremental lending is on higher rate, so that gap is being maintained. And I personally believe that that there is a rate cut maybe in December, maybe in February. It's not that far. So I don't think that there will be a pressure on rates as we move forward. Rather, it would be easing up, So that is why my sense is that our NIM will be protected.
All right, let's move on then. If you could talk about, are you actually anticipating any recoveries to increase in the next quarter?
I think quarter 3, quarter 4 will have better recoveries than H1.
Progress towards the universal banking license. That's of course something everybody is watching out for. Any timeline, any feedback, any sense as to where you are in that process and how's that conversation shaping up, Sanjay?
It's very early days, so no update as such. But I think personally for me, applying to universal license is one of the milestones in my life because it is not so easy that we go and look for one of the greatest platform of the world from our regulators. So I'm thrilled, I'm excited, honestly. So look forward that, how regulators, give approval or, go into this process.
I'm sure we all are waiting to see that as well. But if you could lastly tell us what will be the growth for FY25 in terms of your advances and deposits, what should we all watch out for?
I think I just commented in my call last night that we would be doing around 25% growth in asset, followed by the deposit.
Okay, Sanjay, on that note, we'll let you go. Thanks so much for joining us today. But with that, it's a wrap on this edition of First Ring.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.